Hey everyone, welcome back to Corporate Decoder. Today we're diving into Lease Corporation's latest report, and let's just say they are flying high on some important financial news. Before we ditch our boarding passes for a deep dive, if you are new here and love breaking down complex corporate filings into simple, actionable insights, make sure you hit that subscribe button, and don't forget to join our Discord community linked in the description below for more real-time discussions. So, what is the big news from Lease Corporation, or AL as we'll call them from now on? Well, on the 12th of February 2026, they dropped their latest report, which primarily focuses on their financial results for the period ending the 31st of December 2025. Think of this as their look in the rearview mirror at their performance over the last year. Now, the juicy stuff usually comes out in these operational and financial condition updates. Companies put out press releases to announce key numbers, and AL is no different. They've shared their financial results for the last part of 2025, and this information is what we're going to unpack for you. It is not just about a number going up or down. It is about what that means for the company, and for anyone watching its stock like a hawk. To understand where AL is going, we need to look at how they're managing their money. They have different ways of raising funds. For instance, they have these medium-term notes. These are basically loans they take from investors that they promise to pay back over a period of time. One example is their 3.700% medium term note Series A, which are due all the way out in April of 2030. This tells us they're planning for the long haul and have financial commitments stretching out years into the future. Managing these debt obligations is key to their financial health, ensuring they can meet their repayment schedules without stretching themselves too thin. When we talk about a company's stock, we often hear about different classes of shares. AL has class a common stock, and this is what most investors are likely familiar with. When their financial performance is strong, it generally means good things for the value of this stock. Conversely, if the numbers are weak, it can put pressure on the stock price. So understanding how their core business performance impacts this common stock is crucial for anyone invested or considering an investment. They also have specific funding structures like their series of medium-term notes. This basically means they issue certain types of notes that are grouped together, and this particular group is known as Series A. It shows a structured approach to their financing, allowing them to raise capital in specific tranches tailored to their needs. Diversifying their funding sources and managing these different debt instruments carefully helps them maintain financial flexibility and stability. Now, the star of the show in this filing is usually the press release containing the detailed financial results. And in this case, Exhibit 99.1 is precisely that. This is where the company officially announces its earnings, revenues, and other key financial metrics for the period. This is the primary source for understanding their performance. And we're here to break down the most important parts for you. This is where the actual numbers that paint the picture of their operational success or struggles are laid out for everyone to see. Looking at the bigger picture here, Lease Corporation is a big player in the aircraft leasing industry. They own, manage, and then lease out airplanes to airlines all around the world. Think of them as the landlord for the skies. Their business model is all about managing a large fleet of expensive assets and ensuring those assets are generating revenue consistently. This means they need steady demand from airlines, favorable lease terms, and an efficient way to manage aircraft maintenance and life cycles. When airlines are doing well and expanding, Alabama generally benefits. On the flip side, when the aviation industry faces challenges, like during a downturn or a global event impacting travel, Alabama can feel the pinch. Their leased aircraft might sit idle, or airlines might delay payments or even go bankrupt, which directly impacts AL's revenue and profitability. So, their financial results are a direct pulse check on the health of the global aviation market and AL's ability to navigate it. So, what does this latest report tell us about Lease Corporation's standing and future prospects? Based on the financials that are typically released, we can assess their revenue growth, their profitability, and how well they are managing their debt. For instance, if their revenue is up significantly from the previous year, it suggests that airlines are taking on more leases or renewing existing ones at favorable rates. This could be driven by an increase in air travel demand or airlines needing to refresh their fleets. On the other hand, if revenue is stagnant or declining, it might indicate a tougher market or increased competition. Profitability is also key. Are they making more money after accounting for all their costs like aircraft depreciation, maintenance, and financing expenses? Strong profitability is a sign of efficient operations and good management of their asset portfolio. We also need to look at their debt levels. As a company that invests heavily in aircraft which are incredibly expensive assets, Alabama likely carries substantial debt. While debt can be a tool for growth, too much debt can be a significant risk. It can lead to higher interest payments, making it harder to generate profit, and can put the company in a precarious position if revenue falters. So, we're looking for a healthy balance between debt and equity, and a clear ability to service their outstanding loans. The specific numbers in their financial statements, which are detailed in the press release we mentioned, will reveal these trends. For example, if we see their earnings per S-Hair or EPs showing a steady upward trend, this is generally a very positive sign for shareholders. Now, let's consider some potential risks and opportunities AL might be facing. One major opportunity lies ahead with the expected continued growth in global air travel post-pandemic. As economies recover and people resume traveling, airlines will need more aircraft, which directly benefits leasing companies like AL. Another opportunity could be in newer, more fuel-efficient aircraft. Airlines are increasingly looking to upgrade their fleets to reduce operating costs and meet environmental regulations, and AL can capitalize on this by acquiring and leasing these modern planes. On the risk side, geopolitical instability or economic downturns can significantly impact airline demand and their ability to pay leases, which would directly hurt AL. Regulatory changes concerning aircraft emissions or international aviation could also present challenges. Furthermore, fluctuations in interest rates can affect the cost of borrowing for AL and the lease rates they can command. Intense competition in the aircraft leasing market is also a constant factor, requiring AL to be innovative and efficient. In conclusion, Lease Corporation's latest financial report provides a crucial snapshot of its performance and its position within the dynamic aviation industry. By dissecting their revenue, profitability, and debt management, we gain a clearer understanding of their operational strengths and potential vulnerabilities. Their ability to adapt to market conditions, manage their vast asset portfolio effectively, and navigate the complexities of global finance will be key to their continued success. It is a balancing act between owning expensive assets, leasing them out profitably, and ensuring the aviation sector remains robust enough to support their business model. Alright, that is our breakdown of Lease Corporation's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they are set for continued growth, or are there storm clouds on the horizon? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.